Hey people, thank you for stopping by at Building Wealth with Rajiv. Investing Bear and me chatted in February 2022. His returns in last 5 years were about 1900% then. Now we chatted again in July 2022 to see how's he coping with this massive sell-off. What changes is he making to his portfolio in this high inflationary environment when a possible recession is around the corner? Some really valuable learnings here. For such discussions, please follow my channel, Building Wealth with Rajiv. Press the bell icon for notification and do comment what you think about this chat. Did you expect this? I mean, this kind of a, bloodbath. Was this?
I don't think anybody could really expect this. There are mentors of mine like Saul, who have been doing this a lot longer than me, that say this is a once every 20 years kind of a thing. This is not a every couple years or even an every decade kind of thing. So no, it would have been really hard to predict this, and it would have been really hard to be mentally prepared for this, to be quite frank. I mean, I feel, I try to be pretty zen, like you said, but it's painful for everybody, and I try to sort of be cognizant of that and sympathetic to that, while also trying to be sort of an encouraging voice, because you're right. I'm not up 1900% anymore since January 2017, but I'm still up like 1300%. So worse things have happened, and I think the long game is really what I'm trying to play. Which it's funny. It doesn't always seem like that when the companies change in our portfolios, but really I'm in this for the long haul.
So 1900% to 1300%. Now, a return of 1300% will be bloody music to so many years, right? I mean,
right. And I don't want to say that like I'm bragging or
no, you're not. You're one of the most.
But I also don't want people to get discourhed by that and say, "Well, I'm not up 1300%," because I think a lot of people probably haven't been doing this, since. Again, we keep going back to the beginning of 2017, but I've been doing it even longer than that. And a lot of my friends have done it for decades longer than I have. And I just want to just remind people that if you started this in 2020 or 2021 and you thought the market only went up, well, it doesn't. And this is not. This is unusual. It is, but it's not unprecedented.
So what I just want to focus on is market gives surprises all the time. Bear. We talked about 2020. The whole world was going down the drains, and then market showed its color by going 5 times, 6 times, whatever times, and now it showed a different color. So what was the learning for you? I mean, let me just make it specific. Last time we talked is valuations didn't bother you so much. So what's happened with it? Do you think now that we'll be more cognizant of valuations in future?
Well, so we actually talked after things had come down a good bit. I think we talked in January. Thereabouts. And I would have to say, for me, not much has changed since then, except losing a lot of money. but as far as valuations, I think I go back to what I said then, which is, if these companies keep doing what they're doing, the valuation is just a temporary, temperature of what the market is inclined to do, or to the value that the market's inclined to place on the companies today. But I still believe that if the growth is what I think it's going to be in the companies that I hold for the next several quarters and years, then eventually that catches up. And it's funny, sometimes you don't have to wait very long to see the fruits of a company's labor. And so, in fact, sometimes you see more than you really expect. And then 2021 was a perfect example of that, or really started in 2020. Like you said, companies were doing great, but they weren't going, their revenue wasn't growing 200 or 300%, you know, and in 2020, some companies doubled and tripled. So it was, you know, the valuation was probably getting ahead of the growth. And I think that sort of happens in reverse too, is it's the valuation can sometimes get behind the growth, and then we have good times ahead. So I don't know where we are on that spectrum at any point in time. I didn't know in January, and I don't know now, but I do still think those are the dynamics that we've got.
All right. Cool. I mean, what changes? You still running the concentrated portfolio? Has it become more concentrated, or has it become less concentrated?
It actually hasn't been too different. I'm trying to remember what I had back in January. I guess I could look, but no, it hasn't changed too much. I have about 6 sizable positions and 1 tiny position right now. And that's pretty typical. I mean, maybe sometimes I'll have 9 or 10 positions instead of 6 or 7, but it kind of fluctuates.
Okay. All right. And well, how about the macro environment? I mean, you know, I know 4 or 5 months ago we talked about macro environment, and nobody can predict macro environment, but you know, it does show that 2020 went up because there was so much of liquidity in the system, and now it is just, you know, liquidity is being sucked out. So do you kind of see yourself incorporating macro environment into your calculations or in your thinking in future? Or
No, in a word, no. I mean, I guess I'm going to steal from my friend Muji, Hypergrowth. He said to me recently, I just don't know what where I could possibly have an edge when it comes to macro, because you know these hedge funds or venture capital, or you know, basically anyone that wants to put big money to work has a team of macro people employed, and I'm just not going to be able to do what they do. So I don't even try. And frankly, I don't think they get it right a lot of the time either. So I'm very happy just ignoring macro. And the way I see it, it's, you know, if the macro is not in our favor right now, then at some point that will reverse, and I'm just gonna wait it out. Like I said, I'm playing the long game. I don't try to figure that stuff out. I look at companies and I try to figure out what their prospects are.
okay. All right. So let's pick. Is Datadog still your top holding?
It is, yes.
And it continues to remain because the results were fantastic, weren't they?
They were. I mean, I think everything, you know, it's kind of like when it rains, it pours. It's like nothing was quite as all systems go as you know, as it was in 2021. But Datadog was about as close as it gets. I mean, they beat on the top line. Maybe some people wanted another million or two, but you know, let's be realistic. And then the thing that I like the most about their last quarter was how much they raised guidance. So let me actually pull up their numbers. They had a full year guide that they gave in at the end of the last year for 1.53 billion in revenue, and they raised that to 1.62. So that's a $90 million raise in just a single quarter. So I was pretty thrilled with that.
Okay. And how about the cash position and all that? Like I was talking to you about Galgo ratio. I don't know whether I spell his name correctly or not. He's talking about moving more into capital preservation, having more cash, and are you thinking on those lines, or is it's nothing has changed for you?
Yeah, I'm lucky to consider Gaucho a friend, and I don't know if I'm up on what he's published, but I do sort of know where he stands right now. And you know, with his leverage and his options, that added some extra pain, I think, on the way down. And I think this is a really good time for anyone that reads, you know, investing blogs, and he's a good one. He's one of the best. But anyone who reads him or Stock Novice or Muji or anybody, I think it's a really good time to learn to never try to copy anybody, because even the best have really, really hard times. And I think Gaucho and others are able to handle that better than a lot of people would. So it's just really important to know yourself. As far as his sort of change in perspective, I don't really think I'm not sure if it's that. I think you probably just have to ask him. But I think Datadog is still his biggest position.
Yeah, it is. It is.
And so he hasn't changed the way he looks at companies. It's more just, how am I going to survive this downturn and live to see another day? And I think a lot of that has been for him. If I may speak for him, I think he is using fewer options, at least for now, because it's really hard to foresee in the short term a lot of just wild optimism. And that it's hard. I'm not really betting on earnings either, with little call options and things like that. I've never been a big options guy, but I've done I've done a little bit, and I know enough to know that I need to limit my use of that. And I think for 99% of people, just there's really no need to do that. You're gonna have wild returns over the long term, both to the positive and the negative, without even using options.
So I think that's right. But one of the thing, which I like, again, Gaucho's thing, and I know he's the best person to answer his things, is leverage. If you are leveraging a lot, and if you get hurt, then you probably can lose some objectivity. I mean, I'm not saying Gaucho is losing objectivity. Obviously, no, I don't have courage to say that. But you're using leverage. It means you're predicting the market, and then you can get hurt more, and then you can get into a spiral, isn't it?
I mean, I agree. I don't really, like I said. I mean, you're going to have wild swings from the highs to the lows without using leverage. So I don't think there's any real reason to do so. Now, I mean, Gaucho's a big boy. He can do what he wants, and he'll be fine. I'm not worried about him. I just don't personally think most people should do that. And maybe it's cool to learn how, but until you've got to really know yourself. And so I think following along with what somebody else is doing is probably going to be a bad idea. So
okay.
I just recommend anybody that is interested in that, sort of take it incredibly slowly and make sure you know what you're doing. But I don't really think you need to do that to be a complete investor. I mean, again, I go back to Saul. He never uses leverage. I think he may use a little margin for convenience, but not options and leaps. And he doesn't lever up to try to time the market. So it's worked for him for quite a few years.
Yeah, I mean, it's surprising to me, Bear, that, I mean, nothing has changed for you. I mean, 6 positions which were top there is top now. It's a bit surprising to me. I mean, nothing has changed. I mean, market is down 30-40%, Datadog is down 40%, and nothing has changed for you.
Well, I mean, look, I've definitely made some mistakes along the way. There's been some companies that whether they were mistakes or not, I have decided to move on from companies like Monday and Sentinel-1, and we can talk about those and my reasons. But I mean, really, I'm just doing what I've done that has worked so well in the past, and I just feel like there will be a day when it works again. And to be fair, the last few weeks have been pretty good. I mean, there's definitely been some relief. I'm not banking on it lasting, and I have a cash position, as I usually do, and I'm using that to trade, to sort of let positions fluctuate, whether I think they're expensive or a bargain. Will adjust those position sizes and the positions that I already have. So, I'm making the most of a rainy day with this
Mhm.
year, but I. By no means has it been easy or comfortable. I don't want to give that impression. I just,
Mm.
I guess I've been doing this long enough that I feel like this is about as bad as it gets for the style of investing that I've chosen. And it hurts, but I think I'm going to be okay. And I think that, you know, I, yeah, that's
No,
about,
I get it.
that's about the
So,
end of that.
no, no, no. I
I
get
don't know
it.
that, I don't know
Yeah,
what's coming,
yeah.
but I certainly feel like it's been a lot to weather already.
Okay.
And yet
Uh,
I feel okay. I feel like,
Yeah, yeah. No, I think one thing is that last time when we talked, you concerned, you were not very okay with Snowflake, right? I mean, is there a change in thinking on that? I mean, is it in your what do you call site that this is a company which probably would consider at some point of time? Now the valuations have readjusted a lot. I mean, it was $100 billion company that time in terms of market cap. Now it's pretty much half of
yeah.
it.
So I actually am in Snowflake now.
Okay.
It's a mid-sized position. It's about 8% of my portfolio. And if I look back, I'll just look at the end of January. I don't remember the exact date that we talked, but
No problem.
even at the end of January, let's see, Snowflake. Huh, I guess I didn't know anything. Let's see. Yeah, it was. You're right about 100 billion. It ended the month at $275.90. And
Yeah.
of course, right now, even after rising 40%, it's at 155. Um, so that's part of it. I mean, it really is hard for a company at this stage of the game to grow meaningfully from $100 billion valuation. So, it's 55 billion still. It's not cheap, but I I do feel like it is a long-term winner, and so I wanted to get some skin back in the game. Like I said, it's 8%. I feel like it's not going to be the best performer in my portfolio, and that's why it's not larger.
Okay. And your view remains the same, right? You're buying the highest growth company, which are on early on S curve, and once they explode, they mature, you go ahead and sell them, right? That.
It's always a balancing act for me, I was happy to own a little bit more of an allocation in Snowflake when it was at 120 than I am right now. So it's, that's sort of the finesse that I try to do. But yeah, in general, you're right. I want to be in the companies that are growing the fastest and growing, profitably, or at least moving towards that uh, in a very tangible way. And, you know, the durability of growth is really the main thing. It's not necessarily uh, just what grew the fastest last quarter. It's what I think is going to grow the fastest next year and the year after that, even if I don't continue to hold it because maybe the price gets out of whack, or maybe there are other factors at play. But in general, yes. I mean, I think that growth is, you know, these SaaS companies are going to grow predictably, and that is what's more important than just the growth rate alone.
Okay. And the upcoming quarterly earnings are not worrying you. I mean, you're zen about them.
You know, we'll see what happens. I I try not to pretend like I know what the future is going to bring, but from everything that I have heard, I believe software, especially the mission critical software, is strong. I wouldn't want to be in consumer um, facing software right now, or certainly, cyclicals. I mean, a lot of ink has been spilled about Upstart and
Oh,
the
fuck,
circle,
man.
the circles that I run in.
Yeah.
So that's been an interesting one to
Yeah.
sort of do a post-mortem on. But I mean, that's, it's definitely reinforced for me the importance of finding things that are as mission critical as possible.
I think that's a learning for me also. I mean, I still think positively in Upstart, but Goldman Sachs came out with a sell on it. That's a bit scary. Now, two more questions that we are done. One thing is one question Monday. Why did you sell it? Just briefly.
Couple things. One is that exact thing we were just talking about. I think that if you have implemented Monday, if you're a company that is a Monday customer, I think probably you're not ripping it out. But if you're not a Monday customer, I don't think there's a criticality to getting something like Monday in, if that makes sense. I don't think that it's a necessary thing like cybersecurity or even observability. I think it's a nice to have, but maybe not a must have, especially when you're talking about prospective spending or, becoming a customer, adding Monday for your company. So that's just the way it feels to me. I don't know if that's true. The other things would be just the financials are slowing to some extent, and maybe they're gonna bump back up last quarter, but the trend was not what I was looking for. They were adding more and more and more every quarter, through the pandemic. I know. that was probably why. But then in the last few quarters, they really have kind of leveled off with how much they're adding to revenue each quarter. And it looks like they're guiding for that to pick back up, to they're gonna be adding more revenue than they have the last few quarters. But first of all, I'd like to see that, come to fruition. But also, those questions about the criticality of what they do. I just don't know that every company needs Monday.
Okay. Now, Upstart, you're not going back, right? You're not, right? It's not mission critical to you.
We'll never say never, but to be honest, I'm not particularly interested at this point, because I think the thesis that I had a year ago or more has to some extent been proven wrong. The thesis that I had was Upstart was completely exploding, and the adoption that they were getting, that they've gotten from all these banks and credit unions, was going to compound the revenue like it did for a few quarters. And I don't know what the macro was that made that happen for a few quarters, but it is not happening now. In fact, they are, even management doesn't seem to know how fast they're going to be growing. And so that's not what I am good at. That's not a growth stock. That's something else. And to me, it looks very cyclical, and cyclical stocks do not get anything like the kind of premium that growth software stocks do. So they've had to revise guidance down a couple times now. If you count this pre-announcement of this coming quarter, and I don't know what the annual guide is going to be, but I have to imagine that's coming down again. So when it all shakes out, if it starts growing again, we'll see. But I'm always going to value it as a cyclical, because I think it is.
Oh, yeah. Okay, last question. 3 top learnings or reinforcement of beliefs in this bear market, Bear. 3 or 4 or 2, whatever. Any new learning, any reinforcement of your beliefs?
Let me see what I can come up with. So I think number 1 would be, don't be afraid to have a cash position, because I really think, okay, so obviously if you have 20% cash and everything goes down, you're going to lose a little bit less, right? One fifth less than you would if you were 100% invested. So that's obvious. But I think also what the cash position lets me do is adjust my positions. I mean, if Datadog is at $85 a share, as it has been recently, I'm happy to have a couple percent more, and I can just take that cash and move it back into Datadog. I'm not scared with a slightly larger Datadog position. And then, if Datadog has a huge run and goes up 30 something percent in a single month, while things are still kind of crazy like they are and unpredictable, then maybe I take a little bit of that off the top and put it back into cash, and I still have a very large Datadog position. Well, that's exactly what I've done. I've done that in my favorite companies, and I don't play around with companies that aren't in my portfolio, but I have ranges that I'm comfortable with for the companies that are. So that's maybe multiple points, but it all revolves around being comfortable having a cash position. I think it's reinforced that for me. What else? I guess just the general thing we were talking about before of really knowing yourself, and I don't think I would be able to be this zen if that's what I seem like. I don't think I would be able to do that if I was sort of borrowing my conviction of how to do this. That the only thing that gives me comfort is the fact that I've been doing this for many years, and though we haven't had this kind of a downturn because they're rare, we've had plenty of downturns, and none of them have been fun. This one's been the least fun, but having that sort of the experience to have figured it out, what works for me, makes me realize I think people need that. I think if you're copying someone, if you're trying to do something because it's just recommended, that's not going to work until you sort of hone your own process.
Okay, I think that's valuable. That's really great. And one of the things which I think comes out to me is cash, which you said. Cash is not cash. Cash is a position.
Totally.
That is something which I learned. So thank you, Bear. I think some very valuable nuggets for people who are panicking, and including me, to to remain invested in if you're convinced about the stocks we are in. So thanks, Adnan.
Well, thank you, Rajiv. It's always good to talk to you. And I try to be the voice of comfort, but I also totally admit that I am still learning. My Twitter profile says I'm wrong about a million things, but yesterday it was 1,000,001. So just learn a little bit each day. So awesome. I appreciate you being willing to talk to a fellow learner.